Now welcome to the final unit of this course. Okay, trading inside bars or find setups today, make money tomorrow. Now inside bars are two candle patterns where there is a big candle and a small candle inside the first candle range. We can call the first candle as mother candle and the second candle as a baby candle, just like a pregnant mother. See the fact? Now let's look into chart. Now that is called an inside bar. Color of candle is immaterial at this point. Let's see the pattern reality of this. Actually, inside bars occur 10% of the price action. That means 1 in 10 charts exhibit this pattern. So once you start to look for this pattern, it is going to be appearing everywhere. Everywhere in the sense it can be trends, counter trends, continuations, reversals. So can't trade every inside bars out there, okay? And we will see the pattern benefits of the inside bar. This typically evolve in a strong trending market moves which doesn't exhibit pullbacks, okay? And a proper inside bar pattern analysis will facilitate entry in the trends with strong momentum. Of course, you get to know immediately if your analysis is correct or wrong. By the way, this pattern is a low risk and high reward setup. More than that, process is extremely simple, guys, and stress free. Who doesn't like a stress free trading, right? Let's see the tools required for scanning inside bar. Of course, we need candlesticks, dudettes and dudes. Next would be 3 exponential moving average and 3-6 MACD oscillator, 12-26 MACD oscillator, 50-100 MACD oscillator, all of these 3 with 9 period signal. Now let's check the pattern logic. It's a 2 candle pattern, okay, where mother candle comes first, then the small candle, where small candle should be within the highs and lows of the mother candle. But for easy explanation, what I'm going to do is I'm going to give candle some name. Alright, let me take off those as well. Yes, 0 shall represent candle 0, which is inside bar, and candle 1 be the outer candle, and so shall be corresponding highs. High of 0, open of 0, close of 0, low of 0. Similarly, high of 1, close of 1, open of 1 and low of 1. So looking into this, high of 0 is less than high of 1 and low of 0 is greater than low of 1. See, traditionally inside bars are traded based on 2 candlesticks, but here it is failing considerably these days due to manipulation. It's a big fail. So that's why we are bringing in another candle before both candle, and this candle would be called as candle number 2 with marking like so, as in high of 2, close of 2, open of 2 and low of 2. The high of candle 2 has to be lower than the high of candle 1. This gives us a 3 bar candle pattern. Now price must evolve a higher high prior to inside bar, and first 2 parameters we shall consider them to be the inside bar index 0 and the second parameter shall be named as index 1. Index 1 high is greater than index 2 high. Okay, so please don't worry too much about the terms involved here. Kindly listen. Once you start to see the setup on chart, you will be cleared of all the doubts. Whatever you saw was going for long as of now. Okay, now let's see something for shorting, and we have a 3-bar pattern like this. Of course, we will name them as 2, 1 and 0. Looking into this, high of 0 is less than high of 1 and low of 0 is greater than low of 1. And one more thing, low of 1 is less than low of 2. This shall be also termed as index 0 and index 1. Now here index 2's low is less than index 1's low. When I say index 2, it's candle 2, index 1 is candle 1. See, it's just representation like that. Now inside bar's logic, let's see that. It is a range consolidation within prior interval. Remember, little bar gives explosive moves. Here it is consolidation, so we should love them. Okay, and these inside bars actually form a triangle pattern on lower time frame, and by the looks of it, 80% of the triangle pattern tends to move in the direction of price action. Look into these bars now. Okay, and look into that. Both are same. Okay, one is daily candle and other is 15-minute candle. These are just expansion and contraction of price themselves. Got it? When price reflects expansion and contraction, its derived indicator will also plot expansion and contraction. Okay, we are jumping into the concept of technical parameters required for this. And now this is about divergence. Now you all know with previous classes when I took regarding 3 exponential moving average moving away from price tends to come back meeting it, right? So when it tends to move out, the expanded scenario tends to contract by coming back. The same way we have expansion and contraction. We have an expansion like this moving up, then we have a contraction over here stepping down, and then we have another expansion again, right? Got it? Let's see to measure contraction. Now plot 3 moving average, exponential moving average. Okay, it of course it must test, I mean the price has to move through the 3 moving average. Plot 3-6 MACD indicator, we will see that on chart. Okay, here the 0 line has to be crossed. Don't worry, I will show you how this is done. MACD of 0 should be greater than MACD of 1, that shows expansion. MACD of 0 less than MACD 1, that shows contraction. Look into MACD as like this. This is the MACD is 3-6. What I'm going to mark is expansion. That is expansion. That is an expansion. Now one more expansion. This is another expansion. See, it's just a trend, a higher highs. The depth part is contraction. We have another contraction. Got it? This is how it is. Now the requirements for this are the 3 EMA. I told you, right? Remember, it has to test the price. It has to touch. If it doesn't touch, it is having divergence. Now inside bar must have a contraction. Now how do you see contraction? That is seen through MACD 0 should be less than MACD 1. And trend flow, meaning the candle 1 MACD has to be the highest high from 3-6 crossover above the 0 line. All these shall be explained in understandable way on charts. Okay, don't worry about it.